Eric Muadid, Muadid.com, with a review of some of the stocks that you own in your portfolio. Before I go to the stocks, let's take a look at the 50 crossing phenomena that I've been talking about and you always hear me talking about. So the 50 crossing of the RSI. So it can be on the monthly, on the weekly, on the daily, on the hourly. So that's the number. Now, a couple of weeks ago, maybe a couple of days ago, you had asked me a question about the fact that a stock NVAX had moved back above 50 and if it meant it was a buy. Now, the one thing I would like to clarify here is, number one, like today, we are looking at the NASDAQ showing a relatively big down day, down about 1.3%. And the reason is for today only. So this is a one-day phenomena because we are taking a look at the daily chart for the NASDAQ. And for today only, we can see that its daily RSI is moving below 50. As you can see here, it is also cracking that 50 level. So what that means is that for today, the way the formula works for the RSI, you have to introduce a big number to change the average so that it can move either from above 50 to below 50 or vice versa. Whenever you're moving higher, you need to introduce a big formula so that the RSI can move from below 50 to above 50. So keep in mind that this is normally a period call. If it's happening on the monthly, expect a monthly move to reflect either a move above 50 or below 50, which is of big magnitude. If it's happening on the hourly, for example, if you take a look at the hourly for the NASDAQ, you can see here, even on the hourly, we go back to, let's say, this period here. On this hour, the market had a big drop. On the subsequent hour, or a couple of hours later into the next day, we had another sharp move above 50, which was responsible for this reversal and a gap up. So that move is normally good for the day or for the hour or for the minute, depending on which time frame is moving above or below 50. As you can see today, the NASDAQ opened the action lower with a big drop, one long bar in the first half hour of trading or so, and we can see that the RSI moved below 50. Here we are using the RSI period of 26, but that doesn't change the interpretation. So for today and today alone, we go back to the daily. We can see that as of right now, I made a call earlier that the market could be lower at the close. That seems to be true because it's trading below where I made that observation. Why? Because the daily RSI is moving below 50. If we take a look at the Dow daily today, we can see just for today that the Dow is moving below 50, which opens the possibility for a big down day, down about 109. And generally speaking, on the days where you're seeing a move above 50 or below 50, that tends to suggest that it is going to be the same into the close. So right now, for example, if we take a look at the Dow, it is trading down about 113 points. What this suggests is that into the close, it's probably going to see a bigger drop, because that's generally what happens. Now, I have to, just for the sake of making sure that I don't forget to mention this, is on the days, if you ever observe that, let's say today, if the Dow was trading with its daily RSI below 50, but somehow by the end of the day, it did not close below 50, after spending some time below 50, closing above or refusing to move above 50 is an indication that the market is strong. So let me repeat that. For today, we see that the Dow and the NASDAQ and the S&P 500, but in this example, we're taking a look at the Dow. The Dow, if by the end of the day, it manages to hold above the 50 on the daily RSI, the fact that it did not move below 50 suggests that the market is strong. It's a subtle observation. Generally speaking, whenever you see the market act well around the 50 and refusing to go below the 50, that's bullish. If it is trying to move above the 50 and fails into the end of the day or end of the period, that suggests that the market is weak. So keep an eye on those subtle things. If it can move above 50, it's a strong market. If it fails to close with the daily RSI above 50, it's a sign that the market is not very strong. But generally speaking, whenever you see now we have about an hour and a half before the close, market's been trading below 50 most of the day, it's going to be a down day net. And this can also be seen by the SPX, which for today would suggest that right now below 50, and so that also suggests that it is going to have a net big down day, down about 1%. When I made that observation that this could be a down day, it was trading much higher during the day with its daily RSI at 50.6. Since then it's cracked below 50 and it's lost some further points. So that's what I'm saying is, yes, you can use how the market responds around the 50 level. Now keep in mind, if this was a weekly chart that we were looking at, that would suggest a big down week. Okay, so just keep in mind we aren't talking about the daily here. Tomorrow the market could move back above 50 for a big up day. You move below 50, down day or down session. You move above 50, up day or up session. If you fail to move below 50 after spending some time below it, if you bounce and do not close below 50, that's strength. If the market was trying to move above the 50 but failed and instead did not go above 50, then that suggests that the market is weak. So the movement above and below 50 is not a trivial thing. It can give you a sense of what the market is trying to do. As I record this video, you can see that the market is continuing to drop even further. Now the Dow is down 130 points. Why? Because the markets are moving below 50 for today. And that's why. It's a very simple but powerful way of understanding what's going on in the market. Okay, so let's go to, I just wanted to make that clear because sometimes there's a confusion. Yes, we can use the 50 to tell us when stocks are bouncing well above the 50, but mainly when I ask you what do you expect on a certain day, it's because the markets are moving below or above 50, and we can get a sense of what's going on for the day by that technical observation. All right, let's take a look at the stocks that you own here, or at least some of them. We begin by taking a look at NVAX. Now here's the problem that I see here. Right now you are looking at an 18% down. So you are down 18%. You've taken that risk, calculated risk, to see whether the stock would bounce, and my feeling was always that that was too risky. You never want to take anything more than 8%, but you made a judgment call based on other factors, I would say. But this is becoming a problem. You are down 18%. For the stock to come back to where you bought the stock now, it needs to move up 22% for you to get back in the black. So that's the risk. And this is becoming a problem. So you're going to have to see the stock move 22% before you can get out even. All right. Now, if we take a look at this weekly chart, you can see that it could still find some support around the 50, like it did here, around the 50. It's coming to the 50. So it could eventually find support there, but the risk is that it could not also. And that's the problem. We see it moving below recent weekly closing lows, so that's not good. And we are looking at the possibility that the 10-week moving average, the way it's pointing down, could eventually cross or undercut the 13-week moving, so the 13-week moving average could undercut the 34-week moving average, which is bearish, generally speaking. As you can see, whenever it crosses above the 33-week, a positive crossover tends to have this type of action, just like it did here with a positive crossover. Now you're looking at the risk of this becoming a bad position and a bad holding, because if we see here that the RSI has moved away from 69.1, so that means that the stock is not as strong as it was a couple weeks ago. That's a problem. If we take a look at the daily, go back to some of the charts I've been sending you back and forth and some of the video analysis, is if we draw the line connecting this low, this double bottom low here, close to this one, and ever since we broke down here, this became support. Keep in mind that it also became resistance around the 50-day moving average. So that was another red flag short term. Now we've been using this entry. There's an entry here around the 50-day moving average, and let me go back and take a look at a 1.5 year daily chart so we can understand what's going on here. All right, if we take this breakout, and this breakout is off these lows, which was successful in moving the stock higher from about $4 all the way to 10, so we can draw our uniformity line, which would be somewhere around there. And you can see that the market did itself use this as double bottom support during these lows here. It came close during this period for this bounce, and here we saw support, which is during these lows. So now if it can show support and hold above the green line, if it can show support here, then that's good. Maybe this is just part of the sideways action before it recovers. But the risk is, what if it doesn't? So we always have to be aware. So yes, it could bounce, but the risk is maybe it might not. Also, let's take a look at the BTK, which is part of where it belongs to, the biotech index. You can see the biotech index is also dropping below recent weekly closing lows, which is not good. But the biotech index has yet to drop below 50. The last time it came to the 50 level, around same time of last year, that held. So maybe it still has a chance of eventually finding support, but for now it doesn't look that great. In fact, if you take a look at the daily, we've been using this line here for support. This line goes back to the prior entry level like that. If you go back, there was a breakout in the price on the RSI here, which is this lows, and so this has been a bounce territory for the BTK. But now what we are looking at, even this was double bottom, close enough for that support. Couple of things, we've broken below the 50. The 50 became resistance again, and now the line that was a buy, this line here that is in blue and red, or blue and green, is now becoming like resistance. So this could be a problem short term. Also, if you take a look at the hourly, we can see that the stock had come back to this break line here, and if we extend it this way, you can see this was short-term hourly resistance, which was during this period. If we go back to this sell signal earlier, go back this way, you can see that this also was the break around the break level. So this level around the 50 has been where this market has been stalling here. And so short term, it don't look great. Take a look at the monthly for the BTK, and what we see that the monthly is actually your strongest I guess technical aspect of the biotech space, because it continues to hold above 69.1. As long as the biotech is holding above 69.1, it could recover. In fact, I did mention to you that it could possibly even break out after 1 month of rest. And if it can break out above that 4,000 level, that could be where it could do well. But for now, those dailies and the weekly charts do need to find some stability before this can start correcting itself. The other stock that you own, Tree, had a strange reversal last week, trading at 65 at some point, only to close at 55. So that 10-point reversal is not the greatest, but it's not as broken. As you can see that it continues trading a little bit more stable. The line connecting recent weekly lows is still holding the stock, connecting here and now here, As long as that line is holding the stock together, I think this one is a little bit more stable than the NVAX. We take a look at the monthly. You see that the monthly has a very close here. In fact, just about to break out after 1 month of rest. We see that the monthly RSI continues holding above 69.1, which is great. So it looks good to me, in my opinion, there, that it's not your worst holding. And we can see that it has come back to a level where it could hold on the 50. And we can also see that there was an entry here that brought it from the lows here to nice new highs. And so we can generate some information from there and draw it like that. You can see the market has respected this green line by holding firm here during short-term lows there, finally held during this period, which was this lows and a consolidation, and now we've come here looking like we could bounce. So TREE looks okay in my opinion. The other one that has been doing great for you, I think right now you are up off the highs about 36%, and on the weekly this one still looks good. HZNP looks good. You can see on the weekly continues to hold above 69.1, and on the monthly almost at 3-year highs, close to all-time highs. So this one is looking strong. It's already positive for the month. MACDs are trading at all-time highs. So in terms of momentum, as you know, this is your strongest holding, and it's holding relatively okay. If we take a look at the daily, we can see that there's a little bit of a risk that this short-term support line fails, and this support line connects recent lows like that. So that needs to hold, or you can take another view, which is most recent lows if you draw it like that. Either way, you see that there's a line either connecting recent lows here, which is a valid line because it connects to all these points. How do you know it's valid? Because it is the stock market itself is telling you that the line is valid because it connects to all these points, and now the stock is trading there. If it can bounce around here, that's good. Otherwise, if it corresponds with a break of now these two lines, this time connecting the lows in the RSI and here, if those two lines break, that's going to suggest that the stock is going to have to come down. And even if it's to come down to the upward sloping 50-day moving average, that's going to be a relatively good drop, about $2-3 to get to that 50-day moving average. But a break of that line is not good. I need to point out something here. Here we can see what happens when a stock is trading well and holding the 50. As you can see, ever since there was a slight breakout here, in fact there was a breakout there, the stock has been trading well, coming back to the 50 and holding. So simple uniformity line that I've been trying to show you how to use this. Ever since this breakout and off the lows here, the market has been using this area with uniform activity to bounce. Even this period here, it was finding support on this line before eventually getting into a momentum groove. We have nice uniform activity there close to that line. So if it can crack the support lines that I drew, and I'm going to draw those two lines again, if it cracks that line and this line, your next area where it needs to hold steady and show support is going to be back to this uniformity line. Hope that makes sense. So even though it can crack short term, there's still some hope that it finds support back to this line where the uniformity line is. Also, take note of the fact that whenever you're talking about the 50-day, the 50 level of the daily RSI holding, it's during periods like this. Take a look at this uniform activity below 50 and back above it for nice re-entry. Even this here looks like a V-type formation, uniform activity below 50, back above it for a re-entry somewhere here. And recently it came here with uniform activity, held the 50 level and snapped back the pullback and went on straight to new highs. So yes, you can use the 50 to gauge how the market is responding. If it holds around the 50 with uniform action, that's indicating that there could be strength and a rebound could take place. Otherwise, what I was talking about is, as you can see here, the markets are still dropping and might drop as we have about an hour and 17 minutes to go before the close. Why? Again, because the SPX is moving below 50. So for today, the movement below 50 suggests that we are going to have a big down day net, and more than likely an even bigger drop by the close. Eric Mwathe, good luck, peace, and blessings. EACS. I am out.